Good morning, Orat Nation. Hope you're having a wonderful day. We've got to talk about rent control. Yes, it looks like rent control has been passed in another West Coast state. This time, the great state of Washington has passed rent control. What does it mean? What happens next? Let's talk about it. So it appears that rent control has passed the process in Washington state, currently going to the governor's desk for signature. It is expected to be signed. What is entailed in rent control? In this case, it is capped at 7% plus CPI with a max rent boost of 10%. Now, as someone who invests in California, we passed a version of rent control, 4, 5, 6 years ago. I believe in California at the time it was 5% plus CPI, but I might be mistaken. Again, too, with a cap of 10%. But what happened after rent control? And again, folks, rent control might be one of these contentious efforts or things that feel good in the moment. But if you actually look at the long-term history of rent control, it is pretty stark. Most economists will agree that rent control does not achieve the desired outcome. What happened in California? What will likely happen in Washington? Well, first and foremost, in California, everyone gets a rent bump every year. Historically speaking, it was not uncommon to have landlords raise rents every other year. But now, because of rent control, if you miss a year, you never get it back. So what happened in California, what will likely happen in Washington and other states that pass their version of rent control, is you can guarantee that landlords will raise rents once a year, because if they don't, they never see those dollars back. The second thing that you start to see with rent control is less development. Again, developers obviously do this for a return. If their returns are capped or somehow restricted, you will undoubtedly see less development. In addition to this, what will likely happen, and maybe you see this as a good thing, maybe you see this as a bad thing, you will see some landlords decide not to play. What will they do? They will basically ask their tenants to leave. They will clean up the house. They will put it on the market and they will sell it. They will just see being under the thumb of government as interference, and they will decide not to play. So if you fast forward a rent control city, town, state, what happens is over the course of several years, the quantity of rentals falls, new development falls, and you guarantee rent increases each and every year. That is the long run history of rent control. Reduces supply and increases costs. But hey, another state passed rent control because they don't look at history. Let's talk about some economic data. We got some clear economic data now, and it is not good. It is not good. We'll start with Case-Shiller, right? We are a real estate channel. Case-Shiller, again, this is for February. Frankly, every time I talk about Case-Shiller, I have to remind you the data is irrelevant. This data we're talking about today is in February. We're basically in May. So again, it is only relevant for those folks that like to look at the charts in historical perspective. That said, we got to talk about it. Home prices up 4.5% year on year. We are seeing softer and softer numbers. For example, last month we were up 4.7. It would not shock me that Case-Shiller continues to collapse. As you know, my call for home prices is -1 to +1 for the year. So we'll see where Case-Shiller ends up in December. Consumer confidence. This is not good. I suspect this drop in consumer confidence will get President Trump's attention. It will get his administration's attention. This one might even get Jerome Powell's attention. Folks, the level of uncertainty in our economy is now at COVID levels. I'm not talking 2 years of COVID. I'm talking March of 2020 COVID, right? When the world was going bananas and we're doing stupid things. COVID low is 86 for consumer confidence. we hit it again. I'll say that again. Right now, with all of this tariff kerfuffle and uncertainty and just noise and fear and all of this in the systems, our consumers, us, you and me, are freaking out. And when we freak out, we don't do anything. So again, last month was 92.9. Let's call it 93. It was expected to go to 87. It went even lower to 86. These are horrible. I would almost call them tragic numbers. This is why I have been saying for quite some time now, President Trump and the administration better start posting wins, or this thing is going to get away from us, and it could be bad. Lastly, we had the JOLTS report. Remember the job openings report? We were talking for a long time. We had 10.1 or 10.3 million job openings. We basically had 1.5 job openings for everybody looking. Well, that is now down and down significantly. Last month was basically 7.5 million. It was expected to be flat at 7.5. It too was down basically to 7.2 million. What does that mean? That means more and more businesses are refusing to hire and canceling recs. This is not something you see going into the boom time. These are behaviors of companies that are uncertain, fearful, and taking dollars off the table. This is where we are. This data, this quote unquote soft data, is going to start showing up in the hard data. It's just a lagging process. It is not good. I do want to congratulate 2 people for joining school yesterday, our all-important school community, one rental at a time. I want to thank Rob and Creative Casa. I thought that was a very creative name. Creative Casa, thank you for joining school. Don't forget to introduce yourself, get to level 2 and level 3, unlock all of that education, figure out which accountability group. You got 6 to choose from, matches your schedule, and just get to know all of the amazing peoples there. Also, don't forget, we did our creative finance session last week, and we have the CEO of Property Radar coming on this Sunday just for school, so we can talk about how we can go from on-market hunting to off-market, how somebody with a full-time job could set up a very simple drip campaign for postcards and the like with very low cost threshold and just increasingly hunt for that deal of a decade. You are not going to want to miss it. Also, don't forget, yesterday the video went live talking about Property Radar. They were nice enough to give us a link for a 5-day trial, free. Please click that link so that when we talk on Sunday, you have questions. You're going to get to talk to the CEO and one of their, I think, their customer success managers. So let's have our questions ready to make sure that Property Radar will help us hunt off market. Another economic metric I got that was particularly fearful was the Dallas Fed Business Index. Now, I will admit, I don't think I've ever talked about the Dallas Fed Business Index. It's not one of those reports that I look at. However, it was ugly. The business index last month was negative 16. It was expected to get slightly worse to negative 17. Folks, it came in at negative 35, almost negative 36. That is 100% miss to the downside. Businesses are uncertain. It is becoming painfully clear. Consumers, small business, frankly, even big business, and investors are uncertain. And when we're uncertain, we are doing nothing. We are frozen. Not good for the economy. In fact, Goldman Sachs CEO probably said it best. The uncertainty is raised to an unhealthy level. Folks, I will remind you that consumer confidence came in at March 2020 COVID lows. You never want to be compared to March of 2020 for anything economic. That was bananas. We were locked in our houses for some reason. Not good. Not good. On top of that, we are starting to see the impact of shipments from China falling off a cliff. The port of LA is now talking about 20 ship or sailings canceled in May. And again, folks, May starts in a day and a half. We also have 1/4 of the normal arrivals scheduled for May. They are estimating that, again, Q1, a lot of companies and businesses bought ahead. They're estimating that people have 5 to 8 weeks of inventory before we start seeing empty shelves, or at least different options. Maybe you want a large blue shirt and there are no large blue shirts. Maybe there's a bunch of purple ones and only your blue and small. Right? Your options will be limited. Not good. We did get some earnings, and again, a big earnings week. We'll go to UPS first. UPS beat top line, beat bottom line, which means they shipped a lot and made a lot of money shipping stuff. However, they do anticipate less Amazon shipments, and they're cutting 20,000 jobs. Yes, folks, 20,000 jobs being cut at UPS. SoFi beat top line, beat bottom line, and actually increased guidance. I'm going to guess a lot of companies do not increase guidance this quarter, but hey, SoFi did. Also said they're going back into crypto. Yes, SoFi looks like they are going to re-enter the crypto investing business. PayPal missed on revenue, but beat on earnings. Again, I think we're going to see a lot of companies kind of miss on revenue and maybe manage the income statement to make earnings look good. It is very clear that the U.S. housing market is getting weaker. Shout out Lance Lambert at Resi Club. Apparently, of the 200 largest markets, 54%, so what would that be, 108 of them saw month-on-month price declines, many of those very small, but nonetheless, over 50% of markets in the spring selling season went negative. So again, what does that mean for the rest of the year? Hold on tight. Scott Bessent, probably one of the most important people talking today, he says, we are speaking to at least 17 partners over the next few weeks. Scott, get a win. Scott, you need a win. Frankly, the administration needs a win. We all need a win. We need the U.S. consumer, U.S. investors, U.S. businesses. We need to know it's working. Get a win. Get a win. Number 2, good chance we will see income tax relief in the tax bill. You got my attention. I suspect if this works with tariffs, that we will be able to help folks with no tax on perhaps tips, Social Security. Heck, if it's big enough, maybe we even get to the point where if you make less than $150, you don't pay income taxes. Wouldn't that be nice? Although at this point, it certainly just sounds like a message. But hey, if we can deliver no tax on tips and no tax on Social Security, things of that nature, that will be a promise made and a promise kept. Then we got tariff income could be used for tax relief. Again, I think what we're doing at the administration is they're trying to change the narrative. We have gone from a huge negative cycle, and they're trying to build out of it. And talking about tax relief is something that a lot of us would welcome. Don't know if you heard this, but the foreclosure process for FHA has been cut in half. What do I mean by that? I don't know if you guys know this, but during the Great Recession, if you wanted to buy an FHA foreclosure as an investor, you had to wait 30 days. FHA foreclosures went to owner-occupants first, nonprofits first. However, unfortunately, what they have now found is by doing that, they allowed the asset to deteriorate. Again, a house that is vacant and known to be vacant often gets vandalized. So now what they've done, they have finally figured out that giving owners or owner-occupants and nonprofits 30 days is foolish because their assets are collapsing in value. So what did they do? They cut it in half. It is now 15 days. So again, owner-occupants and nonprofits still have first right of refusal, which is awesome. But now they just have to be a little bit more expedient. They have 15 days to choose before investors jump in. We did get a few more earnings I see here. We got Waste Management. They missed on revenue, beat on earnings. Again, I think a lot of folks are going to be doing that. You can't fake revenue, as Danielle DiMartino Booth and I both say, but you can manage earnings, which I've told you many stories about. F5 Networks estimates that the tariff impact will be in the low 7 figures. They too beat top line, beat bottom line, and raised guidance like SoFi. And then Nucor. Nucor is an interesting story. They beat top line, beat bottom line. If you don't know Nucor, they are an American steel manufacturer. Yes, folks, we still have one of those. The American steel manufacturer expects to have strong pricing power going forward, i.e., tariffs on foreign competitors. We did get an update on active inventory from the one and only Mike Simonson. This data is noisy, dirty because of the Easter Sunday. So again, week-on-week comparisons are not particularly helpful because, again, there was Easter Sunday, which really wipes out one of the days, if not the whole weekend. But that said, we got the data. We might as well share it. We had 68,000 new pending contracts. Oh, by the way, folks, I don't know if you know this. Interest rates today are noticeably lower than they were last April. Not many people realize that. Rates today are lower than last April. So again, people looking for lower interest rates, congratulations. You actually have lower rates today than last April. Supply or active inventory was up 1% to 729,000, or a whopping 31% year on year. Again, folks, remember, I keep telling you, year of the investor, less demand, more supply equals more motivated sellers. That's why we're trying to educate you in school on creative financing, how to buy properties with 10% down, houses, duplexes, even apartment buildings. And we're showing you how you can do off-market marketing this Sunday. We are trying to give you the tools and courage to look for on and off-market deals and get creative. As far as new listings, there were 70,000 new listings in the last 7 days. And then finally, active inventory. This is big news. This will be headline news next week if it becomes true. Next week, it is estimated by Mike that active inventory will surpass 2020. We've been in a deficit for 5 years. We are about to exceed this week or perhaps next 2020 levels, which again is good news. More choices, more motivated sellers. You know the story. Median price, 453,000. Again, this is active listings. That has been roughly flat for 3 years now. Again, what did I tell you about 3 years ago? I told you we were going to have 5 to 8 years of flat. I told you we had the 2 or 2.5 years of appreciation, which is all we were going to get for the decade. So once again, the calls on price have been right. Looks like a couple of more points and we'll move on. Q1, the wealthy keep spending. If you look at the data from Amex and JP Morgan, which those credit cards are generally higher income, higher credit, jumped 6%. However, if you go to the lower tier of credit cards, transactions are down 4%. So the K-shaped economy, you know, the have and have nots, the story continues. It will be interesting if that will roll into Q2. I don't think it will. I think even the wealthy are sitting on their hands because, again, as Goldman Sachs CEO said, uncertainty has raised to an unhealthy level, and that is never good for a consumer economy. And then the last thing I will say is it is wild to me that 11.1% of all credit card payments are minimum payments. Folks, if you're making minimum payments on credit cards, ouch, that is a lot of interest. So, folks, at the end of the day, I thank you for being here. Like, subscribe, comment to One Rental at a Time. Also, if you are use Spotify, I would appreciate a quick follow on Spotify. All of our videos now go to Spotify within 24 hours of recording. So, again, that would be wonderful if you check me out on Spotify. And, of course, join school. There is no better place to get educated, to get support, to get around other people who believe that 2025 is the year of the investor. Take care, and we will see you tomorrow live at 7:30 a.m. Take care. Good luck.